Hello everyone, and welcome back to this training session of accounting. Today we will see accounting as a form of communication. First of all, we will see what is accounting. Simply it is the language of business, and it is the process of identifying, measuring and communicating economic information about organizations. Why we use accounting? The main goal of accounting is to provide useful information to several users, like service activity. Economic information is also necessary for decision making, and also the need for a formalized type of bookkeeping and reporting results from complex business transactions. Accounting information for internal users. We have accounting for finance, human resource, R&D, production, marketing, and executive management. For external users, we have creditors, financial analysts, government agencies, suppliers, potential owners, banks, current owners, and so on. The accounting equation is assets equals liabilities plus owner's equity, or the stockholders. By the way, owners are the stockholders. Assets are economic resources that equals creditors' claims to assets plus the owner's claims to assets. So it could be, for the economic resource, could be cash, could be equipment, could be machine. For the creditors' claims to assets, could be debt, bank loans. For the owner's equity, it could be capital stock, and so on. So now we will see the financial statements, or les états de synthèse. Donc, are copied or are a codified way of reporting and presenting economic information about a company, and the main focus is on presenting information especially useful like profitability or information for specific groups like investors. And also they describe the organization's financial health and performance in a condensed and highly informative way. And also it is an excellent starting point for comparisons. So these are some basic financial statements. Now we will see the balance sheet. It presents the financial status of a company at a point in time, and we call it le bilan. Donc, its first section shows the company's assets. The other two sections show how these assets have been financed. It's an illustration of a balance sheet hidden. We will find the name of the entity, the title of statement, specific date, and the unit measure, if it is in dollars or Moroccan dirhams or euro. This is just an example of balance sheet. We have cash, accounts receivable, land, equipment, and these are the total assets. We have here the liabilities and stockholders' equity. So assets equals to liabilities and stockholders' equities. So as I told you before, the assets could be cash, could be accounts receivable, could be inventory, property and equipment. And how are these assets financed? So there are only three possible ways: by the owners or investors through an investment, We have creditors of the company, I mean here suppliers and bankers, and self-generated wealth should be an income. So why differentiate between owners and creditors? So creditors have the legal right to claim the amounts due, whereas investors don't. So what a company owes to creditors are liabilities, and what a company owes to owners are equity, and they are not a debt. So liabilities are some accounts payable and some notes payable. For the stockholders' equity, they arise from two ways. So either a capital stock or an ownership in a corporation in the form of a certificate, or either retained earnings, and these are earnings that have not been paid out in dividends, and it is the amount of income earned less dividend distributed. For the income statement, it measures the profitability of a company over a period of time. We can say in French compte de résultat ou bien compte des produits ou des charges, et it reports the income over a period of time, and usually the income is revenues minus expenses. So the revenues are inflow of assets received in exchange for goods or services provided to customers as part of the major or central operations of the business, and the expenses are outflow of or the using up of assets as a result of the major or central operation of business. This is an example of an income statement, and we have it here, revenues minus expenses. So here we have the statement of retained earning. So this statement explains the change in retained earnings during the period, and retained earnings represents the accumulated earnings or the net income of a corporation less the amount paid in dividends to stockholders. Also, dividends are distributions of the net income of a business to its owners. So here is a statement of returned earnings. This is an example of returned earnings, and this is the relationship among financial statements. So now we will see the foundation of our financial statements. So the GAAP is generally accepted accounting principles are rules used as guides for measuring and reporting financial conditions and activities of a business. And the GAAP are the organized group of principles and assumptions under which financial statements are prepared. So the main purpose of the GAAP is to make information in financial reports relevant, reliable, and comparable. We have here financial statement assumptions. So we have the time period, the cost principle, the monetary unit, the going concern, and the economic entity. So each entity has its own books, records, and financial statements that are separate from owners, and there is no combination between personal and business assets and liabilities or income and expenses. So the cost principle are record assets at cost paid to acquire them, and continue to value assets at historical cost until sold, and they have more objective than market value. So the monetary unit is usually how we measure, and it assumes the economic measure is relatively stable and there is no adjustment for inflation made in financial statements. Now we will see the time period assumption. So we assume that it's possible to break up an entity's earning in discrete time periods. It could be a month, quarter, a year. So it's necessary to provide users with financial results on a timely basis. There is a rule of the game, so there are some rules for GAAP, rule makers, fast rule enforcers, we call it SEC, and the CPA regulators, and it's the ICPA. Concerning the account in Morocco, there is a normalization process that was initiated in the early 80s, and the CGNSC was finished in 1987, and it was only implemented in 1989, and its key concepts were finalized in a national colloquium organized in Casablanca in 1982, and also it's composed of la norme générale des entreprises and le plan comptable général des entreprises.